Welcome back to the deep dive. Ready to dive into some seriously interesting market commentary and analysis today.
Always up for a good deep dive.
Well, today we're going to be exploring AI and how it could shake up global finance and, of course, the rise of digital assets. And thankfully, we have a seasoned market observer here to help us make sense of it all.
Well, it's certainly a fascinating, landscape right now.
Yeah.
Lots to unpack.
Yeah, no kidding. Okay, so let's start with AI. One thing that really stood out to me from all the material was the contrast between all the hype and, well, what AI can actually deliver. Like, on the one hand, you have predictions about superintelligence, changing the world.
Yeah.
But then on the other hand, you have, skepticism about whether AI can even reason. What do you make of all that?
Well, it's a bit like the Wild West out there right now.
Yeah.
We're seeing massive investments in AI infrastructure. Hundreds of billions of dollars.
Wow.
Yeah. Some sources are comparing all this spending to, the historical patterns we saw with technologies like electrification, the internet even, pointing out that those huge infrastructure investments were really crucial to those revolutions.
Okay. So, are we laying the groundwork for AI to become as transformative as those other technologies?
It's certainly possible. I mean, one estimate even suggests that AI's energy demands could reach 128 gigawatts by 2029.
Whoa.
Yeah. Imagine the equivalent of 15 nuclear power plants dedicated just to AI.
That's insane.
But there's also a lot of speculation driving the market, particularly around the idea of superintelligence.
Right. And it seems like everyone's trying to catch that next wave, even if some of these companies with these sky-high valuations, haven't even launched a product yet.
Yeah.
Like one example I saw was Safe Superintelligence. They're raising funds at a $30 billion valuation.
Yeah. Well, the key is to separate genuine innovation from inflated expectations.
Yeah.
While some companies may be overhyped, AI is already making a real impact in fields like healthcare, transportation, finance.
Sure.
But, just because an AI can beat a chess grandmaster doesn't mean it can understand human emotions or make complex ethical judgments.
Okay. So how can our listeners sort of stay informed and avoid getting caught up in all the hype?
Well, it's important to be discerning and to do your research. Understand the real-world applications of AI. Look beyond the buzzwords and focus on companies with a clear path to profitability. And remember, technological revolutions often play out in cycles. So we may see a correction in the AI market as reality sets in, but that doesn't diminish the long-term potential.
I see. Speaking of hype cycles, let's move on to digital assets.
Okay.
They seem to be kind of evolving from their early casino reputation to potentially a really powerful tool for capital formation.
It's a fascinating shift. We're seeing digital assets move beyond speculation and into, real-world utility, especially with the emergence of decentralized finance, or DeFi.
Right, DeFi. For those who aren't familiar, can you give us a quick rundown of what DeFi is and why it's gaining traction?
Sure. So DeFi essentially uses blockchain technology to allow people to lend, borrow, and trade directly with each other without the need for traditional intermediaries like banks.
Oh, okay.
So it's a more open, transparent, and potentially accessible financial system.
Interesting. And one of the sources even described it as a capital exodus from, traditional finance systems to these new tokenized yield platforms. What's driving that shift?
Well, there are a few key factors. Digital assets offer advantages like efficiency, global reach, and, future readiness.
Okay.
Transactions can be settled almost instantly and across borders, which is especially important in a world increasingly driven by AI and automation.
The scale of the digital asset market is becoming hard to ignore, too. Like take Tether, for example. It's a stablecoin pegged to the U.S. dollar, right?
Yeah.
And it now holds over $109 billion in U.S. Treasury bonds.
Wow.
That's a pretty big sign that this isn't just a niche market anymore.
Exactly. And we're seeing more mature use cases emerge, too, as the market evolves. So while the early days of crypto were dominated by speculation, the focus is shifting towards building applications that solve real problems and create real value.
So it seems like the Wild West of crypto, as some have called it, is slowly giving way to a more structured and productive landscape.
That's the exciting part. The infrastructure has been tested, the technology is maturing, and now we're seeing a focus on developing applications that can revolutionize everything from supply chains to financial services. It's a potential game changer, particularly for those who have been excluded from traditional financial systems or who live in countries with unstable currencies.
It's interesting you say that. I remember all the stories about, crypto millionaires back in the early days.
Oh, yeah.
And it seems like that initial hype while it was chaotic, might have actually served a purpose.
Yeah. You could say it was a sort of casino onboarding phase. It introduced millions of people to the concept of blockchain and digital assets,
Hmm.
even if it was through the lens of speculation.
Mm-hmm.
Now, as the market matures, we're seeing a shift from hype to utility.
Right. Before we move on, there's one more thing I wanted to touch on regarding digital assets. One of the sources argued that digital money is almost like future-proof, especially as we move towards a world with more AI and automation. They even suggested that AI agents would be more likely to use digital wallets than traditional bank accounts. Do you think that's a plausible scenario?
It's an interesting thought. As we rely more and more on automation,
Mm.
our financial systems are going to need to adapt. And digital assets, with their speed and efficiency, could definitely play a role. But there are challenges,
Yeah.
like regulatory hurdles and security concerns that could, hinder adoption.
Yeah. It's interesting how these themes of technology and finance are playing out on the global stage as well.
Yeah.
One of the sources brought up the seizure of Russian assets after the whole conflict in Ukraine,
Right.
and they argued that this could erode trust in the European financial system.
It's a valid concern.
Hmm.
The decision to freeze those assets raised questions about the security of holdings within European institutions,
Yeah.
particularly for nations that might find themselves at odds with, well, Western powers.
Yeah, it's a complex issue with, arguments on both sides.
Definitely.
On one hand, there's the argument about upholding international law and holding aggressors accountable. But on the other hand, there's the potential for unintended consequences and a perceived double standard
Right.
that could really damage the credibility of the European financial system.
Precisely. It really highlights the interconnectedness of global finance and geopolitics.
Mm-hmm.
Actions taken in one part of the world can have ripple effects across the entire system.
Speaking of geopolitics, the source also expressed concerns about UK defense spending.
Okay. Pointing out that current levels are a fraction of what they were during the Cold War.
Right.
They even quoted a commentator who argued that a conventional war between the UK and Russia would be over in about 10 minutes
Mm-hmm.
after an exchange of nuclear missiles.
Yeah, the UK, like many European nations, faces a difficult balancing act. Decades of relative peace led to a decline in defense spending. But the current geopolitical landscape demands a reassessment of priorities.
Yeah, it seems like simply throwing more money at defense might not be the most effective solution.
Yeah,
Especially with the evolving nature of modern warfare.
absolutely. Cybersecurity, information warfare, economic resilience, these are all becoming just as crucial as traditional military capabilities.
Shifting gears to the U.S., I found the proposal for a gold card program pretty thought-provoking.
Yeah.
The idea is that individuals could pay $5 million for this card, granting them exemption from worldwide income tax,
Oh.
as long as they continue filing with the IRS and paying taxes on U.S.-sourced income. It's a bold idea, and it certainly sparked my curiosity. The source suggested that if the U.S. could sell 1 million of these cards, it would generate $5 trillion in revenue.
That's a staggering figure. But I wonder about the feasibility. Are there enough high net worth individuals willing to make such a significant investment, even with the tax benefits?
That's a good question.
And would it really address the complexities of the national debt?
Those are important questions. It also raises concerns about fairness and potential exacerbation of existing inequalities.
It definitely seems like a program with both potential benefits and significant drawbacks. I'm curious to see if this idea gains any traction. Now, before we move on to market trends and portfolio strategy, I want to bring this back to our listeners for a moment.
Absolutely. This discussion highlights the importance of staying informed and thinking critically about, well, global trends and their potential impacts on financial decisions.
In a world where events can seem increasingly unpredictable, it's more important than ever to do your research, understand the risks and opportunities, and build a portfolio that aligns with your long-term goals. Now, for our final segment, let's delve into market trends and portfolio strategies. Our source really emphasized the need for resilience in these, volatile markets.
Yeah.
They even suggested a barbell portfolio approach as a way to navigate all this uncertainty. Can you break that down for our listener?
Sure. So a barbell portfolio basically balances high growth but potentially volatile assets on one side with more stable, high-yielding investments on the other. Think of it like diversifying your bets.
Mm-hmm.
So you might have things like high-growth tech stocks or emerging market equities on one end,
Right.
and then balance that out with more conservative holdings like bonds, real estate, or dividend-paying stocks on the other. Exactly. The goal is to capture the potential upside of those high-growth areas while mitigating risk with those more stable investments. It's a strategy that can help you weather market fluctuations and stay on track toward your long-term goals.
Our source also expressed some frustration with the performance of European startups,
Hmm.
noting that their combined value is actually less than the market cap of a single U.S. company like Home Depot.
Wow.
Why do you think Europe has struggled to cultivate a thriving startup ecosystem?
Well, there are a few factors at play. Europe's regulatory landscape can be more complex than in the U.S., which can stifle innovation. Access to venture capital is another challenge. I mean, European startups often have a harder time securing funding compared to their U.S. counterparts.
Yeah.
And there are also cultural differences to consider, like attitudes towards risk-taking, which can impact entrepreneurial activity.
The source even went so far as to say that Europe is funding Russia's war effort while bankrupting itself. It's a strong statement, but it does seem to reflect a sense of frustration with the continent's economic and geopolitical challenges.
There's definitely a feeling among some that Europe needs to be more assertive in pursuing its interests on the global stage. It'll be interesting to see how these dynamics play out in the coming years.
Now, I know you're always looking for unique investment angles. Did anything in our source's personal portfolio strategy stand out to you?
Their piece in Europe Basket definitely caught my eye. It's an interesting concept, betting on companies like Wizz Air, Leonardo, Pantheon, and RWE that would stand to benefit from de-escalation and stability in the region. It's a reminder that even amidst global uncertainty, there are opportunities to be found if you're willing to look for them.
And of course, we can't forget their UK net zero suicide must end soon basket.
Right.
I have a feeling we'll be diving into that one in a future episode. But for now, let's loop back to digital assets one last time. Our source reiterated their belief that we're witnessing a capital exodus from legacy finance to tokenized yield, and they urge listeners to get ahead of this trend or risk becoming exit liquidity. What are your thoughts on that?
It's certainly a bold statement, and it speaks to the growing conviction among some that digital assets represent a fundamental shift in how we think about and manage money. Whether you agree with that assessment or not, it's a trend worth paying attention to.
It's interesting how they framed the early days of crypto as a brutal but necessary customer acquisition phase,
Yeah.
full of scams and speculation, but ultimately serving as a massive stress test for the technology.
Yeah, it was a wild ride, no doubt about it.
Yeah.
But as the market matures, we're seeing a transition from hype to utility. The focus is now on building real-world applications that leverage the power of blockchain to solve real problems. It's an exciting time to be watching this space evolve.
So what's the key takeaway for our listeners today?
I think the overarching theme is that we're living in a time of rapid change and transformation, both in the world of finance and on the global stage. The more you understand about these interconnected trends, from AI to digital assets to geopolitics, the better equipped you'll be to make informed decisions and navigate this complex landscape.
And don't be afraid to challenge conventional wisdom, explore new ideas, and build a portfolio that reflects your own understanding of the world.
Exactly. There's always more to learn, and staying curious is key to thriving in a world of constant change.
Well, that's all the time we have for today's deep dive. We covered a lot of ground, from the potential of AI to the evolving world of digital assets and the complexities of the global landscape. I hope you found it insightful. Remember, knowledge is power. Until next time, keep exploring, keep learning, and keep diving deep.